Alright guys, welcome back. It's been a while since I published a video, but I've been pretty busy, so today I want to share with you the results of my latest strategy. Now what I'm showing here is my blog, my website. It's both. Here I share sometimes a bit of a personal stories here, like this post where I discuss me kind of moving away from trading on futures and explaining why trading with leverage uh, it can be quite counterproductive if you don't have the right strategy. And some of my posts are kind of technical as I used to write, describing the strategies that I make available. So in today's video, I will talk about this one particular strategy that actually I'm running on spot, not on futures. I had described this strategy in this post that I'm showing, and I will dive into some additional details there. So it's going to be more interactive than just reading this article. I think you should read this article. If you haven't, I'll leave a link. And then try to watch this video till the end. And then if that's still not enough, you can ping me on Discord and we can discuss this more. So this strategy I call AI portfolio. Currently, I'm running this only on Mizar, but I do want to extend it to other platforms like TradingWithABot or even directly available on some exchanges. And it's running on spot, so there's no futures, no leverage. But it has shown pretty decent performance. So here's the Myer interface. I have done 4 videos on Myer, link included below. And I introduced you basically from the beginning how to sign up, how to connect your API. I went into some great details explaining that if you sign up, you should sign up with my referral because I do have some bonus associated with my account, so that is also propagated to you. And when you sign up with Myer, essentially you don't have to pay immediately, but later, as you trade, as you become profitable, you will share some of this profit with Myer and with a strategy provider. So all of that is explained in the videos that I have already published. But this particular strategy, this bot, has not yet been covered by me in a video format. So that's the topic of today's video. So before I go into the bot itself, of course, I need to point out that the last 3 months where I'm showing that the bot itself had performed well also coincided with the overall markets uptrend. So the markets rallied during the last 3 months. We know that there was a lot of optimism related to institutional interest in crypto, inflow of capital due to the ongoing ETF registration and probable approval during January of 2024. So the markets had woken up in the last 3 months. But prior to that, it was very difficult to trade because either the markets were very fearful and there was an overall downtrend. I'm showing here now Cardano, but this is very similar for most of the other coins. We've had one crash in the middle of summer, which was essentially the bottom, and then we almost revisited this again in the end of the summer. And then September, October-ish, it was very flat. So very boring and difficult again to trade. And suddenly we had this rally. So, well, my bot had taken advantage of that. And it's not, I don't think it's actually like, it's not something to be taken for granted. Because if you look at, if you compare, for example, my strategy with what we see in the marketplace. So if you go in Mizar's marketplace, which is an excellent tool to really assess um, how profitable the current situation is, given different strategy providers and different approaches that they have. And currently, if I look, for example, at the highest returns, we see various strategies that sometimes produce over 100% during the last 30 days. Many of them are new, I think. And when I was looking at that particular page, sorting at the highest returns several months ago, I think the highest I saw maybe around 20% or so. So now people are making money. But then again, if I look at the oldest ones, the oldest running bots, we can see that not all the quote unquote proven strategies, the ones that are running for a long, long time, were having a good profit. So just the fact that markets had rallied during the last 3 months, it doesn't necessarily mean that it was easy to make money. It was much easier, that's for sure. But you still needed to have the right strategy to manage that type of a price action. And this is a bit of an introduction to the bot, which I had implemented right in time to catch that inflow of interest and capital. So it's this AI portfolio spot trading bot. Now, as the name implies, it is the bot itself trades AI related tokens. So I also highlight it right here. I say explore the realm of AI and big data while trading top market cap projects. So the strategy itself is not an AI powered algorithm. I know this is very trendy right now to have people saying, oh, ChatGPT wrote a strategy for me or something like that. This is the strategy is fairly traditional, but what it trades are the projects that are in the sphere of AI, and it's not always like a pure AI. It's also somewhat related. So one of the tokens, for example, I have open on my screen is VRA, Veracity, and on crypto.com and a few other websites that give you an overview of cryptocurrency tokens, you could read more about the projects. And also here on crypto.com, and again on many other websites, they classify them, right? So here, for example, the categories are described, and this is a partially gaming and metaverse token, and also it has a bit of an AI flavor here. And here is the high-level description of the token. So Veracity provides rewarded video player technology, patent pending. It has their own token, available in 500 games. And I think like these kinds of descriptions and further research, looking at the white paper, at the websites, definitely social media of the platform associated news. I think this is important, and it's also a bit new to myself. So I've been focusing a lot on the technical indicators, on price action, on strategies, not and I will also in the last year or so I've been primarily looking at the Bitcoin. So I haven't explored and dived into the world of the altcoins, and there is a lot of good investments there. So they need to be studied and understood. And the key word here again is an investment. So what the bot is doing and what I'm somehow subconsciously or half consciously doing there with this strategy is that I'm not just trading them, but I'm also investing into the projects that are part of this bot. And what that means is that I'm not trading contracts of the tokens. I'm trading the tokens themselves, right? I'm not trading on futures where we trade, the contracts. We trade derivatives of the tokens. We go long or we sell them short. No, this is different. We actually bind the actual projects and we sell them like the way you would trade stocks. So that's the mentality change with this particular strategy. And with this mentality change, there's a lot of things actually change in your perspective as a trader. Well, because you go from futures to spot, you of course don't have this fear of liquidation. You cannot get liquidated as you can on futures. And on futures, you could get liquidated if you don't watch for your margin requirements. But I also feel that if there is a technical glitch and some miscalculation can happen on exchange that governs your trades, or the price just drops below below your liquidation point just for a few seconds, for whatever reason, again, it could be just a technical glitch, then you have this risk of liquidation. And you completely eliminate that when you go to spot. That's very different for me. If you followed my channel or if you looked at my videos from 2 years ago, and I don't regret, and I still look at futures trading and leverage trading, and there's a lot to be said about it, and a lot to be learned about the price action by trading derivatives. But when it comes to wealth building, and again, that's a key word here, wealth building, capital accumulation, I think that this strategy would be better. So you remove the risk of liquidation. You consider yourself as an investor who looks at good projects, and you occasionally take profit. You take profit at various profit targets. This is a bit up to me as the strategy provider and the bot to see how the price action and the market sentiment fluctuates, and then the different profit targets can be observed. So we'll get into this semantics now in a moment. I'll talk about our average profitability and so on. But again, I really wanted to highlight to you the change in trading psychology, in your perspective of how you look at bot trading, if you had been trading futures up till now, and kind kind of not even caring about what you trade. You just care about the profits. So here we do care about what you trade, and I have defined around 40 pairs that are within this bot. Now, different exchanges, I have a number of exchanges that support trading this particular strategy. Different exchanges will have a different combination and a number of these pairs. I think none of them will have all 40, but you will have 10 or 20 or even more pairs depending on which exchange you have your funds on. And my strategy is running on Bybit, and the trades that I'm showing right now to you, these were the live executions were on Bybit. So now as I'm looking at my positions and the close trades, you can see the past profit that I've taken, the P&L per trade, and you can see some of these pairs and projects that we have been part of this bot. So for example, Ford is another project that I think is good to be familiar with and that I find interesting. So again, last 3 years have shown a good growth, not a huge one like some other coins, but significant. And if you look at Ford, okay, here description is somewhat limited, but this is essentially a security project with also AI capabilities. And there's a few other ones that you can see here of what I traded. A lot of them are repeating. So I've done the initial description of the strategy and the bot here on my blog, as I've shown you. And it was already fairly long write-up, so it went into the necessary basic details for you to be able to subscribe to it, to follow it. A lot of it is intuitive, but in case you are new, either to Myer platform or to trading with automation, I think that is serving as a good starting point. And I plan to continue publishing blog articles here on this website. And what I would like to do is actually, I'd like to go into some of these projects and describe them for you. And by the way, I think it's a great hobby for you to read about these projects, because as you will subscribe to my bot, as you will subscribe to my strategy, which I suppose you will, because otherwise you wouldn't be watching this video, it will be kind of boring for you because there's really no action. It's running automatically. You don't do anything. So you may get a bit bored. And what I suggest is for you to do a bit of a reading and research about some of these tokens, GRT, for example, because that, again, personalizes this investment for you. It takes some of your time, maybe anxiety away, especially if you're trading larger capital. So that would be my suggestion to you, and that's what I also plan to do. And I'll publish that. Okay, let's talk. What should we talk about now? I received quite a few questions recently on Discord from people who were just signing up, just starting. So I do plan to have a Q&A format in this video, but maybe I should still go a bit more onto the basics of Myer and how to subscribe. So the way that you would subscribe is by clicking on this Invest Now button. So let's go through that right now. So just remember, please, if you haven't signed up to Mizar, use the referral that I provide below, the referral URL, because your trading fees will be slightly reduced with my promotion code. And you also get a starting credit. Okay, so you signed up, then you need to connect your exchange account via API. And again, of course, we're looking at spot. So when you do an API connection, you connect specifically spot account or sub account, and you found it. When you invest, you could, Mizar allows you to pay per trade. So you could try that if you maybe just want to pilot this first before putting real money. And in fact, another way of piloting something is with real money, but maybe smaller amount. So you could jump to real trading. And then when you click on the real trading, from the exchanges that you have connected here under exchange tab, Mizar will say, all right, some of them qualify. So for example, for me, I would say, okay, OKX, I will go with that one. And then it will prompt you for additional configuration that you can influence. So most of the strategy config is done by myself, and it's locked. You cannot influence it. But what you can influence is your order size and how many pairs you want to trade concurrently. Now, I told you, remember, there was around 40 pairs that are predefined for the bot to trade. And on OKX, we can see that it says, well, only 15 of these pairs are listed and available for you. So then automatically, I'm down to 15 choices. And here, max number of positions, again, that's how many concurrent, how many positions, how many coins you will be trading in parallel at the same time. So of course 20 would make no sense because only 15 is available. But even 15 is not something I would not recommend you to do. Don't do the max number that is available to you. And there are two reasons for that. One, it's not effective from the strategy perspective because the strategy is actually trying to select the best possible pair given on the algorithm requirement. So given a certain price action, market conditions, technical indicators, the algorithm will say, all right, out of these 15 pairs, maybe we could buy 10. But if you say, no, I actually only want to buy 5, then the algorithm is forced to select the best 5 pairs out of, for example, the 10 that it would qualify and to purchase. So that's the first reason why it's good to limit the number of pairs. The second one, of course, is the money, the capital. The more pairs you have, the larger your capital requirement is. On the opposite side of this coin is that, well, you don't also want to have just one or two. You want to diversify your risks, and also you want to give the strategy opportunities to trade different projects because they will behave differently due to various developments that they make, social media posts, various market-related events. So if you limit your trading just to one or two, then you depend, your profit depends just on these two particular pairs. So I recommend, I think, at least 4, and then maybe you can go 5, 6. Some people running even 8. This is okay, right? but not too little, not too many is what I would recommend for number of pairs. So let's say 5. Next, what is your base order size? And here there are two considerations. One is the exchange minimum order size. Majority of exchanges will accept as low as 5 USDT for the initial purchase, for the minimum amount that you can spend to buy a token. Some will require a bit more, like 10, right? So that's the minimum. And this will now give you an idea of how much you actually can afford to purchase and to run with if you have a somewhat small account size. Now, I know I'm quite dry when I speak and explain those things, so it's easy to lose you, I know, and I'm not doing any sound effects and so on. So I'll try to maybe change pace or subject for a few seconds in order to wake you up. What did you guys think of my artwork here? This digital artwork that I put on my blog. It's created with AI, you know. So for each of the posts, I have a little bit of the artwork, and I show just the piece of it, just a small kind of vertical horizontal banner. But there is like a bigger picture, and I'll show you one right here. It's this one, and it's many of them. So I defined a certain visual style with these prompts, and I'm also defining a particular prompt to explain what I want on that image. So it's a lot of fun for me to do those things, and for a number of reasons, because it's pleasing visually, and I'm also exploring how AI works. And also I do want to kind of publish this as one storyline, and you know, it would be, of course, an NFT collection, but it's for fun, right? Of course, maybe profit, but also mainly fun. Okay, just wanted to wake you up a bit, and then let's continue talking about our bots and bot sizing. So now we will talk about math. Okay, so let's say you have your base order 10 and your position size, base order size 10 and your maximum number of position is 5. That means that it's already 50 USDT that you start with as your base order, right? So let me open Excel file and start showing you some math here behind. So you see, if you have your base order as 10 USDT and your number of positions is 5, your total base order is already 50 USDT. That's what you need to have at minimum to start your base order. However, this bot is actually relying on Martingale or so-called DCA to continue purchasing investment at a lower price if the price falls, and that also helps to average out the cost when the price falls down dramatically and allows you to exit your investment. So what I mean by this, if you are again very new to this, I think it's worth to point this out. Okay, where is my bot? It's becoming most popular now, by the way. I hope that will stay, this trend. So you can see this in settings. When you click on settings, you can see the number of pairs that is supported by this bot. So you can see exactly which tokens I have selected. This is public information, all of this, right? So again, here in the bot, you'll be able to find it in the marketplace or from the link that I have provided. By clicking on show settings, you'll see most of the information that you require to see. You see the tokens that we trade, and we also see some of the settings that we have here on the bot. And there is something you need to be aware of that I will point out shortly about the settings. But for now, let's look at the safety order or the Martingale settings. So currently, and that's another keyword, currently, they are as follows. We have deviation at 3.5 to open a safety order. And then we have a volume scale, and a step scale is defined as 1.15 and 125. That means, if I go back to Excel file, that if this is, let's say I'll put like this base order right here. That's the first kind of the entry investment right here. Then we will also have safety order 1, and then we will have safety order 2, and maybe more. If the price deviates, if the price goes down, and the base order will be multiplied by the volume scale. So volume scale is 1.15. That means that right here, this amount will be multiplied by 1.15. And so on. You see, so it will gradually increase. And naturally, your total position size will grow, right? So we will have a total here, total per position. So let's say if we only have 2 safety orders after your base order, like this, that means your total per position, per pair, will be this plus this plus this, right? 34. But also if you have these 5 pairs, right? This will stay 5 everywhere. Then you will potentially also increase how much of your wallet is used for trading these 5 pairs. So let me again maybe to illustrate this calculation with just one position. So let's keep 10 USDT as your base order, but you would only have one position running, right, everywhere. And then you enter your base order, and then there is the safety order 1 and safety order 2. So for example, if you look at this price chart of ADA, just for illustration purposes, the way the Martingale works is that, let's say, somehow you entered your base order here at this price level, and then the price continues to drop like this. Your safety order, the first one, safety order I saw here, and then the second safety order, for example, it would be here. And the idea with the Martingale or DCA is that as you make these purchases at a lower price, you average out your cost. So that means as the price moves something like this, and hopefully it goes up, 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 then you can exit your position with the profit already somewhere here. This would be the level where you could take profit because you purchased here, but then you purchased lower and lower, and all of that is averaged out. So this would be a situation, for example, for ADA, right? And then another coin that you have, and as we said, right, you may have, so ADA would be one of these pairs, and you have base order, safety order 1, safety order 2, and your total is, where to put it, total spent is this plus this plus this. So 34, which is equivalent to this one, right? But let's say you have 5 positions. So all 5 open base order, naturally. Then maybe 3 of them also went down in price and open a safety order. And maybe 1 of them even went down and opened second safety order. So it's 4, that's fine. The first one or the 5th one maybe still at the base order. So this could be the situation, right? You have the 5 pairs, 3 at SO1, another one is at SO2, and the first one is still hanging at the base order. Now you can see your total spend is already 97 USDT. So if your wallet size here is 100, then you would just fit, just fit into the budget required to open all the safety orders. And if we had maybe all 5 already at the safety order 1, and maybe even 4 out of 5 already at the safety order 2, like there's a market downtrend, and you know all the tokens are going down, then you should have had actually 160 USDT in your wallet. And if you don't have that amount, well, it's not going to be a disaster because you're not trading on futures. You would not get liquidated. However, you would not take the advantage to buy at a good price, at a low price. And it's a bit of a pity because a lot of the times, for example, right here, let me draw this. This for just brief moment, the market penetrated this particular level, see? And if you had free funds, that's perfect. Just buy it at this level, because then this will give you an opportunity to take a bigger profit target, profit margin. So in my bot, I had defined 10 safety orders. And I think it's a little bit of an overkill. I may reduce it slightly. On the other hand, I haven't reduced it because I think that this may happen occasionally, maybe for one of the tokens. And to me, that's not a risk. To me, that's actually an opportunity to use this quick, big drop to purchase more of the token and then sell it. This particular DCA or Martingale, I think, is basically mainly for spot. That's not applicable for futures. I don't think, and most people actually trade, and I did as well, right? That's why I'm speaking from experience. A lot of people trade DCA and Martingale on futures, and it's just not wise because you increase quite by a lot your position size. And on futures, there's very there's basically no risk management there. And if you put a stop loss on an increased position size, you're just going to really draw down your account. So I think the strategy is very much okay for the spot. And now, if you look at the statistics, this is an important part. Based on what Mizar had calculated for my bot running here, I have had at most 3 safety orders here, and there were 2 hits. So out of this proportion. To be frank with you, I'm not sure how they calculate these stats. I don't know if it's for the last 3 days or last maybe 24 hours. No idea. I think I will definitely follow up with the Myer team because I'm interested in these statistics. These statistics are needed in order to properly tune the strategy, but also for you to size your wallet correctly. So what this says, this provides some kind of a natural distribution curve, and it says that even though I'm allowing up to 10 safety orders in my settings, we've only had 3 ones hit, and that was not often at all. So going back to an Excel file, we could say, well, let's add one more column with the 3rd safety order, like this. Or we could even do, for the sake of kind of seeing how far the capitals would need to be stretched, we could even do 4th one. And let's do the math real fast. So let's say first safety order is filled, all 5. Second one, all 5. Third one, let's say 4, and the 4th one maybe just 2. Okay, that to me is realistic. Per position, so I would need to add this plus this. And now total spend, I would need to add this plus this. So with the base order size of 10 and 5 position, at that particular somewhat of an extreme situation, I would say, the wallet size should be around 270 USDT. So now we come to the key part where I'm actually answering the question is what should be your base order size and let's say number of positions, and what should be your wallet size. And there are people who would say, well, my wallet size is, for example, 1,000. How should I fit these 2 numbers, right? In these settings, should I put this maybe as RASA 8 and this one as maybe 25? And if that is the case, what should be my wallet size? In this interface, Myer is actually quite helpful, and it provides you with some good insights. So there are statistics available here. This is the previous statistic that I've shown you with the hits. Here, I think it makes a little bit more sense because I think this is now for 30 days. You can see all these orders, including 1 position going as far as safety order 4. So this, I think, is reliable now. And also, we have some good stats here. And this panel, which shows you, it tries to estimate an investment amount needed for you, the wallet size that you need. This one can be a little bit confusing because it's actually combining methodology of the safety orders and the settings that I implemented for the safety orders. And statistics. It considers the statistics for the last 30 days, and it calculates the position size based on the past hit ratio. So I like it, but it's a bit more advanced, right? And for a new user, I'm not sure how much it actually helps. Okay, so here we can see that only one position, very small portion of my orders reached to safety order 4. And hence, this and this and this and this and this added, and it tells you that that should be your wallet size based on the statistics and based on the settings. If we didn't have the statistics, Myer would just look at the settings and say, well, you better have 4,260 USDT for that bot. But since it already gives us some statistics and say, well, the settings tells you you need 4K, but in reality, the strategy behind the bot, the deal start condition, the exit, the selection of tokens, and so on, is fairly effective. So you should be able to survive with 364 based on the past 30 days. And one of the ways, a slightly different way of how I recommend the wallet size to people is I tell them, well, take your base order size and your max position size, so multiply that together, which would give you kind of this base order, which would give you the base order requirement. This one, right? Take this and this. This would give you the base order requirement, and have this approximately as 1/4 of your wallet. So your wallet size for base order 10 and 5 positions would be 50 multiplied by 4, which is 200. This is what I've been telling people on Discord. This is what I wrote in my article. And here you immediately see that this wallet size would not be enough. Oh, but why did I tell people to do the 1/4? Well, the reason I say 1/4, and I always say 1/4 and no less, right? Don't stretch it further. The reason I say that is in order for you to maximize the funds. So the money that you have in your wallet should produce the maximum utility. If this was if you, for example, say, no, let me put this as a 1,000, right? I want to keep my wallet as 1,000, and I'm going to have base order of 10 and 5 positions. Okay, fine. Why not? Perfectly safe. And this situation right here that we have shown, safety order 1, 5 positions taken, safety order 2, 5 positions taken, safety order 3, 4, only 4, and 2 on SO4, right? All of that, if that would have happened, you know that we would have already spent 269 USDT. So if you had 200, that would have not been enough. So you would not be able to open some of the safety orders. You would not be able to buy the lower price, right? You would just have to wait it out. Nothing dramatic would happen, but you'd have no USDT left. You would just invest in the coins and you would have to wait it out. But if you had 1,000, yeah, all of the safety orders would be filled, would be fine. You could even fill some more if the price goes further down. And it's perfect. However, such situation with all these safety orders filled for all the positions is somewhat unusual for this strategy. I don't expect it to happen often, maybe once per month. That means that on a regular day, you should not have any SO4. Maybe you would have two SO3s, and maybe you would have also three SO2s. So that to me is more of an average situation. And if that is the average situation, your total spend would be 177 USDT. Hence, if you have 200, it would have been sufficient, and it would be a very good utilization of the capital because your ROI, your return on investment, is calculated based on the capital employed. So if you had 1,000, then over 800 of this would lay dormant. They would just wait for majority of time. Now, I'm not really saying to stretch this more because we do want to have a little bit of free capital to buy these types of opportunities. So it needs to be balanced like everything. And if you want a simpler rule for wallet size calculation, consider this rule of 1/4. Base order size multiplied by position size, that's your base order, and then multiply this by 4, and that's your wallet size. If you want, you can multiply it by 5. And in fact, this type of math, this type of calculation is probably better than what Myer suggests. Because here, Myer suggests, well, your expected investment is 364. And if we use my methodology, I would say take 25 USDT per position, multiply by 8 positions. I have 200 as my base investment, and multiply this by 4. Well, I think 800 USDT as the wallet size would be appropriate for this, not 364. So that's a perspective that I wanted to share with you on your wallet sizing. And I'm also hoping that with this perspective, with this education, you could actually make your own decision and size your wallet and your positions based on your risk appetite. Hey guys, I congratulate you for bearing with me up till now, for getting so far. If you're still watching, drop a comment below. I'd love to see that. Usually the comment section of my videos is somewhat dry, at least lately. So drop a comment below if you made it so far, just for fun. Okay, it has been a long video. So we went through the most important part, which is the wallet sizing, because it really affects the performance of the bot and also affects your ROI. And if that is clear, you just click next. I don't know how the reinvest your profit works. I could read it, but I didn't bother. So cannot answer on these things. I leave them unchecked. And later, you would just click here on acknowledge that you basically take the risk. I cannot take the risk for you, although I'm trying my very best to make this bot, the strategy, and the education as meaningful as possible. But still the risks, that there are risks. So you need to acknowledge your understanding and acceptance of these risks, and then you click on invest, and that's all. After that, the bot will work by itself. So there are a few more things that people had been asking me. in Discord, and I'll go through them rather quicker now because it's been a long video. I would expand on that maybe in another video if needed. Let's see. Feel free again to leave comments or approach me on Discord or Telegram, whatever you prefer. So a few more Q&A topics. What about the fees? How much do I need to pay? Mizar takes, there are two types of fees in Mizar, and you can see them right here. There's the volume fee and there's the performance fee. So volume fee is something that Mizar takes for themselves. They don't take a subscription like on other platforms you pay per month and so on. They take your so-called credits. So here I have credits that it's kind of like my Mizar wallet, and I top up my credits, and as I trade large volume, then they take a little bit, they calculate it, and they take a little bit of my credits each time. So this is one type of fee. And I believe I covered some of these topics already in my previous videos, so I don't want to go in too much details now. The second fee, which is combined, so it's two fees combined into one fee, is the performance fee. Performance fee goes to strategy providers, most of it, actually, not all, but most of it. And in this case, it's myself, right? I'm providing the strategy. So I'm taking 10%. I think that's very fair. I've seen people taking much larger. Anyway, I'm happy. I'm definitely happy and thankful to all the subscribers to my strategy, really. But you need to be aware, so 10% of profit would also be deducted via credits. So when you trade, when you take profit, all the profit goes to you, to your exchange account. But your credits in Mizar interface would slowly deplete. They would be, now I have, for example, 24 USDT of credits. And as I trade, it would be 23, 22, and so on. And at some point, if you want to continue, you would just buy more credits. And then Mizar distributes these credits. They take a little bit for themselves and they send a little bit to me. So that's how the whole ecosystem works with the Mizar subscription. So that's one question, or second question. The first one, I guess, was the wallet sizing. Another thing I wanted to point out is on your, so I wanted to point out the dust on your exchange. When you trade, when you close your positions, you will have small fractions of the tokens. So I will not log in to my exchange now, so you can see it visually, but you will see this yourself. As the bot trades over and over and over, it will have small, very, very tiny fractions of the token. So that's called dust, because they cannot trade precise amounts. There is always a fixed ratio of a token that is being traded. And everything that's outside is a leftover, it stays on your exchange. It's not a problem. This dust is not a problem. You just need to be aware of it. To me, it's actually good. I feel like I'm getting these small portions of the token which get accumulated and they grow, and maybe I will not sell them. Maybe I will, hold them as my investment. Or maybe later on, as the dust accumulates, I will sell them manually. I'll go in and sell, for example, this one VRA, if I'll have that, just for you to be aware. And I think the last thing I want to point out and maybe somehow repeat or highlight is that this is somewhat of a slower bot. It's not super slow, but it's if you maybe done scalpers or grid trading, right? You expect many trades per day. This bot will have just a few trades per day. And here is the holding time distribution. Generally speaking, this page is good to study. There's a lot of good statistics, and I'm also analyzing them and reporting on them. But I want to specifically point out that sometimes a position will be opened and stay open, will not close for a few days. The maximum that I've seen so far was over 5 days. So here you can see the distribution. We had kind of here 50-50 from these long-running positions. Many stayed for about 12 to 24 hours, and there's a number of them that run from 1 day to 1 week. And that's why if you just subscribe and you see nothing's happening immediately, well, certainly you should see positions open, but don't expect them to close immediately. So if you see them kind of hanging there, don't be concerned. That's normal. And remember, I was recommending you a hobby to go and read about these different projects that you trade. Try that. Okay, I just remembered one last question that I was asked, and on this, I will close the session. So the question was about the settings of the bot and the strategy. So obviously I cannot disclose everything. I think I have shared quite a lot, even with the risk that somebody can duplicate the strategy. And this is okay, because I mean, I certainly would not want that, but the thing is that not everything is disclosed. First, there are certain algorithms of how the tokens are being selected by the bot. That's not shown here. But also, I want to point out that some of these settings are dynamic. Now, what I can promise to you is that the safety order volume scale, this 115 that we calculated for position sizing, that will not change, because this is very important for you to manage your wallet size, to manage your risks, position size. So this is static. But some of the other settings on the bot actually change dynamically once or twice per week based on external algorithm and certain considerations, which I believe also attribute to the bot's success. So the bot is more or less in tune with the market. And on this, I do invite you to try it. And I also am open to your questions, to your suggestions, so I'm easy to reach, to be contacted. And those of you who are already trying it and running it, I do want to thank you very much, because I very much appreciate your trust and consideration you give to me. It also puts me on a spotlight. It's great. Thank you for this. And of course, there is a monetary reward behind that as well for me. So you have my gratitude for that as well. And with this, I wish you a good day and talk to you next time.